So here's the question. What happens when a family office implodes and the market doesn't care? How do you separate the news from what's actually going on in the stock market? And this is a great question to ask this week because I want to look at some price charts because there's this company, it's officially a family office called Archego Capital Management. A family office is basically a company, an entity that either you manage your own money or your own money, maybe one or two other families. So usually very rich people, billionaires, decamillionaires, centimillionaires have family offices. But this family office over the last week called Archego imploded. And it's really taken up a lot of the headlines. And I want to talk about what is going on with it, what it has affected, what it has not affected, because this is just a great example of taking information and news and data and saying, does it really matter? Like, how do we filter it and how do we make sense of it? So I want to jump into the charts. I want to jump over to the charts, and I'll do it now. And let's talk about Archego imploding. It was Archego Capital Management. It's a super interesting story because the guy behind it, Mike Way, very charismatic, very religious person. He gives a lot of his money to Christian organizations. And this is no diss on Christian organizations or Jesus or God, but he literally was leveraged up, 3x, 10x, 30x. And it was the leverage that took him out. And so he's kind of a controversial character. So let's jump over to what started the whole thing. It was actually Viacom. He was leveraged into Viacom, and Viacom came out and said, hey, we're going to issue new shares. We want to issue them at $85 a share. And one really well-regarded financial journalist said, it's not worth it at $85 a share, maybe about $55 a share Viacom's worth in this secondary or tertiary offering, and it absolutely collapsed the price of Viacom. Well, guess who was super leveraged in Viacom? Archegos Capital Management, this Mike Way. And so this started the domino effect of just hitting everything else that this super leveraged company had. Even though the company itself had about 10 billion under management, but because of leveraging, it had maybe 40 billion-ish. I don't really know whether it was 30, 35, or 40 billion, and I don't know if anyone knows that yet either. But they were highly leveraged, and the leverage absolutely went against them. And it started with this one journalist. This may be one of those, if a butterfly flaps its wings in Asia, there's a hurricane in Florida type things. But it's fascinating. We have to see, does it really matter? Other than the symbols it's taking out, has it taken out the market? Has the market really cared? So look at this. Let's just look at a couple things. So here's Viacom. Absolutely been taken back down to its old kind of zone of confusion. It's kind of back into its weather system. So it's right back into that, looking at that. Let me actually do this. We have too much information on the price chart. So here is the price. It kind of was bounced between 35 and 52 bucks. And guys, this week's weekly update, I'm going to be thinking a little bit more with my trading hat on and not necessarily with my investing hat on. And for me, trading just means I care even less how long I own it. So here's Viacom, got taken right back into this weather system here of confusion. That would be a skip. Discovery was another one. This is still, and actually, you know what? Let me do this. Let me put in candlesticks so we can see just how far back. So here's the old high right here of Discovery. And notice that it came almost right back down to where that resistance was. I'm looking at this old high here, and that price came right back down. It literally touched it, and now it's just settling in here. So to me, what I love is just understanding how to read a price chart properly, knowing the time range, knowing what to look at, what not to look at. Literally, the price came right back to where it broke out beginning of the year. Buyers came back in, so Discovery is pretty interesting. And actually, let me just go back to Viacom and just quickly see. Viacom just is in a mess right now. It's still back into that messy confusion of all of this price chatter back here. So Discovery, something kind of interesting is going on. Let's look at some of the other ones. This is VIPS. This got taken out in it too. Now, I did go back and look, and here's its old high from the past. If you look in the past of this price chart, it could not get above $30. To me, what's interesting is as the price came crashing down, buyers came in at that $28 to $30 again. Again, to me, this is what's fascinating about understanding how to read price charts. Yes, it hurt VIPS, but it brought it back down right to where it broke out at the beginning of the year. So that's interesting, kind of like Viacom. Those two are actually looking pretty good. Baidu looks very much like a mess right now. There's all this confusion over here to its left, the older part of the chart. It broke below that. So this is something I would stay away from right now. And I'm just going through these really quickly. These are all companies that were taken out in this Archegos collapse. Here's another one, Tencent Music Entertainment. Look at this. It came right back down to its old resistance. Like it could not break above this. It just couldn't break above it. And guys, I covered some of these symbols. I did a live market update on Monday of this week, but I wanted to dig into this a little bit more because the story behind Archegos Capital Management and Mike Way is just so interesting. He was a protege. He was a student of Julian Roberts, one of the best hedge fund traders ever. And Julian Roberts actually staked him with $25 million to start Tiger Asia. And he crushed it at that and then finally went on his own and did his own family office. But here's Tencent Music. That's right back down to its old lifetime highs. And you can see here, it couldn't break above that. And it's sitting above it right now. So that's super interesting. A couple more. This one didn't come anywhere near its breakout point from the past. It's a younger company, at least from a publicly traded point of view. And so the question is it going to come down here and test this or not? I'm quickly going through some of these symbols that it's affected. And then I want to ask the price charts, different price charts, has it affected anything else? So just a couple more. GSX is super interesting. So Mike Way actually was pumping this. This company was taken out as being kind of a fake company. Muddy Waters, I believe that's the name of the company, did this huge expose how this is just a fake China company lying about everything. But Mike Way went super long on it with different type of leveraged positions to keep pushing the price up. So this is one of those where we don't even need to know the backstory. Something is broken with this because it's kind of broken below all things, and it seriously broke below this, and it's staying below that. It looks bad. What's one more? IQ was also taken out. Oops. Nope, we don't want to look at quarterly. IQ here. The reason why this one's so fascinating is it's clear that buyers have come in every time between 15 and 16 bucks. Now, we can only go with what's happening and what's happened. Those are the only two things we can do. What's happening is every time this price gets down to 15 to 16, it goes up. That's what's happened, and that's what's happening so far. And we know every time this stock gets up to the 29-ish dollar, sellers come in. Now, this one clearly went way above it when it IPO'd, but again, it came right back down. Okay, so that's kind of an interesting story with a bit of a flavor of a background. If you want to do more research on it, just type in Archegos Capital Management, and you can learn about Mike Way and just kind of his past. He pled guilty in 2012 to insider trading and had to pay a $44 million fine. So this is a guy who has been investing with hundreds or billions or tens of billions of dollars. When you pay the SEC $44 million, you know you're talking about big numbers there. The reason I bring this up is when his positions had to be unwound, and this is part of the interesting story, JP Morgan and Morgan Stanley absolutely stuck it to him. There were 4 banks, and they got together and said, how do we unwind his positions? Morgan Stanley, JP Morgan, Nomura, that's such a hard name for me to pronounce, and Credit Suisse. Well, guess what? The 2 American ones screwed the 2 foreign ones, and they said, we're just getting out. We're not going to work with you to try to slowly move out of Viacom. We're just getting out. And so now Credit Suisse and Nomura, they're looking at a potential very bad first quarter. to 2021 because of Archegos Capital Management and because Morgan Stanley and Credit Suisse really screwed it to them. I bring this up because Lehman Brothers, if you remember Lehman Brothers, that's that biggest bankruptcy in U.S. history, that little thing right there that happened in '08. Lehman Brothers did not help out the New York Fed in 1998 when long-term capital management was imploding. All these other banks came in and said, we'll help out, we're helping ourselves out, and we're going to help out. Lehman Brothers wanted nothing to do with it. Guess what bank did not get helped out by its brethren or its sister-in 2008? Lehman Brothers. So my bet is Mike Way made a lot of enemies in his 20 or 30 year career to have Morgan Stanley and JP Morgan just be like, screw you. Or Morgan Stanley and JP Morgan said to Nomura and Credit Suisse, screw you guys. But this is actually how the big boys work. And they have long memories. Okay, so now the question is, does any of this matter outside of those symbols I just showed you and Archegos Capital Management and Nomura and Credit Suisse? Has it mattered to the financial industry? And I'll just keep these candlesticks open. So really, we haven't really seen anything. Actually, let me just see when Viacom did its huge correction. It started it in March 15th. Okay. So March 15th on here. Yeah, right there. So there's March 15th. It did a little correction. This is the financial sector. Really nothing there. Has it hit just Europe in general? Nope. There's a new lifetime high for euro, for the European stock market here. I'm just looking at the iShares Eurozone ETF. That's at a new lifetime high. At least it's at a new 3.5-year high. Did this hurt Germany here? Nope. Germany. This is actually the index of Germany, so it's in local currency. That is, I believe, let's just do a zoom out. I think we're going to have to go back 20 years to look at this. That's at a new lifetime high. I just want to be doubly sure that's at a new lifetime high. So the implosion of Archegos Capital Management is not affecting the overall market. The German stock market doesn't care. Let's see if MS World cares. This is all world ex-US. Stabilizing above the trade war high, the Trump trade war high right there. This is a index here, so there's no dividends. It's in local currency, and that's consolidating above that, so it's not affecting that. And let me just zoom back or get back to our 3.5 years here. So it's not hurting the overall market. S&P hit a new lifetime high on April Fool's Day. I'm recording this on April 1st. I did see this tweet. The April Fool's is the S&P hit 4,000 with no care of valuation. And I just think, like, why do people care about valuations anymore when we have a Fed that is expanding its balance sheet at any time the stock market drops? We have fiscal irresponsibility printing out trillions of dollars. That's not a political statement, but we got to go with what's happening here, guys. And looks like the overall market does not care about this Archegos company. There's the NASDAQ 100 right there. We looked at Europe. We looked at Germany. Emerging markets here is actually looking pretty good. It's starting to solid up here, firm up here a little bit. And again, Ed, as long as emerging market stays above its trade war peak, that's the trade war right there. That day, the day before, Trump came out and tweeted he's going to do a trade war with China. As long as emerging markets stay above that January 2018 high, you got to be bullish or neutral on emerging markets. So the Archegos story is so interesting. The person behind it is super interesting. It has absolutely hurt people who have been in some of those individual shares, but it's not looking like, and some of these shares, a lot of them were in the communication sector. Here's the communication sector right here. You can't even tell there was something bad that happened. I mean, we can go back to March 15th here and see that it was the peak there. Communication sector intraday fell 7%. If we stop looking at intraday and just keep looking at the close of the market, like we usually do, we can just go back and see, yeah, communications took a 5% hit, but communications is right back up on its feet and moving higher. So super interesting. What I wanted to really bring out is interesting story, Does it matter? Interesting story? Does it matter? What's your filter? And my answer is your filter has to be price. Has to be understanding how to read price charts, because that's what pays, not valuation, not cost to book, not cost to sale, not price to book, not price to sale, not anything really, but the price and which direction it's going. Thanks, guys. If you like this video, you're absolutely going to love my other videos. I put together a great free course, absolutely free, called Clarity and Control. It digs into exactly how to start to get clarity again back in your investing in control. And like I say, it's completely free, even though I did sell it in the past for $300. So if you're curious about that, check it out in the description and let me know what you think about it. Again, completely free. Thanks, guys, for being in my world, and I will see you on the next video. All right, guys, you take care.